Folks, in today's video, we're breaking down the top 5 stocks that are worth buying heavy right now in January 2026. This year is going to be one of the most opportune in stock market history. These are all going to be stocks that you are going to see people talk about all year. And in many cases, I think these stocks are going to move extreme percentage points up. Each of these stocks has a clear case for massive upside in the first half of 2026, has very beautiful catalysts at play and or lined up, has strong long-term proof of concept and or powerful backing, and in many cases are backed by the US government. I'm going to make a detailed case for each of these and let you be the judge. And as always, do your own due diligence and all ideas presented. All I ask in return is that you hit that beautiful like button and subscribe for more content. Okay, let's start with market themes for 2026. So if you don't understand the macro setup this year, you're going to be at a complete loss on why certain sectors are about to completely outperform while others get completely destroyed. So theme number 1 is dollar destruction. The US is sitting on $38 trillion in debt. In 2000, it was 5.6 trillion. In 2008, it was 10 trillion. In 2020, it was 27 trillion. And now it's 38 trillion. So as we talked about in previous videos, folks, there's really only 3 ways out. We are either going to be really frugal, that's not happening. Default is not happening. Some people were saying default, that would be terrible, folks. Inflate away the debt, ding, 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 ding. And the people with money in this economy know that inflating the debt is how they've always done it. That's why gold has had its best year-over-year return since 1979. That is why silver is playing the catch-up game right now, melting up. That's why stocks, even though a lot of money managers don't like valuations, are melting up even more. Assets catching massive buy orders because people are rushing out of the dollar. Bottom line, folks, the US dollar is going to continue to lose value, and assets that benefit from this are real assets, solid assets. They are going to go up. Theme number 2, folks, is Venezuela, the inflation cheat code. So as you know, folks, the US captured Nicolas Maduro and is now signaling a complete rebuilding of Venezuela's oil infrastructure. This isn't about oil company profits per se. This is about breaking OPEC's pricing power and giving the US a cheat code to print money without fueling inflation. Venezuela has 303 billion barrels of oil, the largest reserves on Earth. Production collapsed from 3.5 million barrels per day to under 900,000 per day under socialist mismanagement. OPEC, folks, for those who don't know, is the Organization of the Petroleum Exporting Countries, an organization of 12 member nations that coordinates petroleum policies to influence global oil prices and supply. Their goal is to stabilize oil markets, secure a steady income for all oil producers, and ensure an efficient and regular supply to the consumer. Now, what does this have to do with Venezuela? Well, if the US or US companies rebuild production in Venezuela to 2 to 3 million barrels of oil per day, that's 1 to 2 million barrels of new supply hitting markets controlled by American companies, not OPEC. So whether or not you agree with what happened in Venezuela, whether you don't agree, the opening of their supply is a big middle finger to OPEC, and it is going to derail their dominance, folks. OPEC's business model is restricting supply to keep prices high, but cartels only work when they control enough market share. So Venezuela being under US influence completely breaks that. So how does this impact inflation? Well, think about 4D chess here. By controlling Venezuelan oil, you're crashing energy prices, which in turn suppresses the CPI inflation, which means that you can print more to inflate away the $38 trillion in debt. And at the same time, people don't mind this because inflation looks like it's under control. This isn't just about the US securing oil supply, they're actually securing the ability to continue to inflate the US dollar to oblivion without having actual ramifications. Everyday goods might see subdued inflation, but assets are going to melt up nonetheless. This is how the US has done it for 100 years. But because a lot of countries were trying to pivot away from the US dollar and have been dumping the US dollar, well, the US was losing the ability to do this. But Venezuela is a key chess piece here to make this happen again. Trump probably knows this, the administration probably knows this, the US government secretly knows this, and that's partially why, in my view, why Venezuela may have already been looked at. Theme number 3 here is geopolitical tinderbox. Venezuela, folks, is not the only hotspot. There's Iran right now where tensions continue to be at a boiling point. You had the nuclear situation back in 2025. Defense stocks are pricing in that this isn't over. Polymarket is also pricing in that this isn't over. We are going to see what happens with this one, folks. Many Iranians are looking at this situation like it might be their chance at freedom. At the same time, a more stable human rights focused government in Iran might stabilize the whole entire region. So we will see what happens with that. Another one, Greenland, of course. Trump wants it. There's massive rare earth deposits in Arctic shipping lanes there. This one is about strategic resources, and really it's not about the real estate there, it's about the strategic resources that Greenland has. And then you have China, Taiwan. The US is helping stockpile weapons that accelerate drone production in that region. Whether or not conflict happens, preparation is driving billions of dollars in spending. Great for defense stocks. This could be another Ukraine type of war for the US, where there's not actually boots on the ground, but there is a lot of military production and a lot of money printing, funding a backing of Taiwan. Wars are inflationary, folks. Preparation for wars are inflationary. Cold wars are inflationary. We gotta consider that. So theme number 4, folks, is the AI power crisis. The last couple years, people have been buying stocks in the AI space specifically because they were excited about the productivity gains that AI could create, the amount of money that these companies could generate. But right now, the biggest barrier for AI is the power. AI data centers consume insane amounts of power, and whoever has the most power has the best AI, and whoever has the best AI is the future top superpower. So assume that this is going to be an area that a lot of investment is going to flow into, and you know what the number one power source for AI in the AI grid? Well, nuclear. If last year was the year of developing AI, well, this is going to be the year of powering AI. That is a major theme. And that theme number 5, American state capitalism. The government is no longer just regulating companies, folks. It's going into the free market and backing them. Whether you're talking about rare earths, semiconductors, nuclear defense, tariffs, there's a lot of ways that the government is picking and choosing winners. This isn't your grandfather's free market anymore. The government has decided that certain industries are strategic and is putting its thumb on the scale massively. So anyways, you put all of this together, and what do you have for 2026? Well, you have dollar destruction, you have Venezuela as the inflation cheat code, you have geopolitical tinderbox, and you have an AI power crisis, and then you have American state capitalism, the government backing strategic industries, folks. And here's the thing, every single stock that I pick for this video is directly related to one or more of these themes. My job of this video is to make sure that you're on the front page of what's coming, because everybody else who's not, they're going to get destroyed by year end, unfortunately. Okay, so let's start with number 5. That is CVX. Chevron. Bloomberg reported this morning, quote, Chevron lines up 11 oil ships as Venezuela's dark fleet vanishes. So, as we've been talking about, the US is set to completely open up the spots in Venezuela and completely rebuild out Venezuela's oil infrastructure. And Trump says it's not going to happen with public money, it's going to happen with private money, private companies, and guess who's been sitting in Venezuela for decades waiting for this opportunity? That is Chevron. Chevron is the only major US oil company currently operating in Venezuela. Now, they are positioned to dominate as the US forces a reopening. Pre-Maduro capture, they were already producing roughly 17% of Venezuela's entire output. So, they've already got the relationship, they've already got the assets, they've already got the big institutional knowledge, and most importantly, folks, they've got the first mover advantage on what could be the biggest oil production process in history. This is a massive, massive tailwind and opportunity for Chevron, and they don't have to do this alone, they just have to be the tip of the sphere. And right now, they are the tip of the sphere. So let's talk catalyst here. Catalyst number 1, you got Q4 earnings on January 30th. This is where management is going to give us clarity on Venezuela licensing, the Hess acquisition integration, which is a big deal, and capital allocation. Wall Street is going to be laser focused on what they say about Venezuela. Mizzou analysts have a price target on this of $26. Consensus is around 172 to 178. And these targets were before this Venezuela open up. So analysts see meaningful upside here, even without a Venezuela bonanza. Catalyst number 2, folks, is Guyana. So this is the other growth engine. Chevron's got an offshore production ramp with Exxon that diversifies them outside of Venezuela. Management is targeting over 10% annual free cash flow growth through 2030. So even if Venezuela takes longer than expected, they've got Guyana firing. So catalyst number 3, the Venezuela rebuild itself. If the US provides full sanctions relief and there's an orderly transition of power, which is possible, Venezuela could add several 100,000 barrels per day of production over the next 12 months. And Chevron is the only major player with boots on the ground, so to speak. Now, what about the risks? This is a long-term play. Venezuela's infrastructure has been decimated. We're talking years and years of rebuilding. Oil prices are volatile, and there's always the chance that the political situation on the ground doesn't stabilize in the way that everyone hopes. But here's my take, folks. If you believe American companies are going to redevelop Venezuela's oil resources, and I think that's a pretty safe bet given what just happened, the CVX is the most direct way to play it, full stop. So quick sponsor break. The sponsor is myself. If you enjoy this video, don't forget to hit that beautiful like button for the algorithm and subscribe to the channel for more content. Okay, number 4, SLV, that is iShares Silver Trust. So this is an ETF that tracks the spot price of silver. Now there's a lot of different ways to play off of silver. If you're buying your own silver, maybe consider buying physical bars. But when you're talking about a trade idea, well, I like SLV because there's a lot of liquidity in both the stock and in terms of the options. Silver is a massively scarce resource and one that is melting up right now, especially in comparison to the US dollar. We've talked about silver and China just making a crazy move that will affect the US and the world very greatly. Silver is used in solar panels, electric vehicles, military equipment. Silver is used in AI data center hardware. Silver is literally the best conductor of electricity on planet Earth. When you need to move electrons significantly and efficiently, silver is your guy. But here's the problem, folks. The world is not mining enough of it. So the silver market has been running a structural deficit of 160 to 200 million ounces annually. That means that we are consuming more silver than we're pulling out of the ground. London and Shanghai inventories are at multi-year lows. ETF inflows hit 130 million ounces in 2025 alone, and holdings are now at 844 million ounces, up 18%. You have other countries like China going in and threatening and actually putting silver restrictions on, which puts the US in an even bigger shortage of silver than ever before. Now, layer on top of this the dollar destruction theme. The US has $38 trillion in debt. The Fed is cutting rates. Powell will be replaced in May. All of this is a massive tailwind for hard assets like silver. If you look at gold ripping, well, silver has a lot further to rip. The gold-silver ratio has already narrowed from 104 to 1 down to 64 to 1. Bull targets for silver range from $100 to $175 per ounce. And again, we're bouncing around 60 to 70. That is potentially 50 to 160% of upside if analyst price targets are hit. Now, I actually think that silver can go a lot more because it has been suppressed for the last 30 to 40 years by the US government. And you can watch my previous video for an explanation of how it's been suppressed. Now, silver was added to the US critical minerals list in 2025. That means the government now considers it strategically important, and that's core to understanding why silver is such a good buy right now. If you believe the dollar is being systematically devalued, which I do, and you believe the industrial demand for silver is structural, which I do too, then the SLV stock is a great way to play both themes simultaneously. Now, in terms of risk, we got to talk about the risk. When the Fed does reverse course and hikes rates again, well, hard assets like these are going to cool off. But as I've made the case, if you look at history, well, long term, the dollar is going to continue to be inflated. So you're going to see trillions and trillions of new dollars into the system, which means that hard assets like silver long term are going to melt up, even if they have short-term pushbacks. If you don't believe me, just look at the last 100 years. Ask yourself if government is suddenly now way more disciplined with money, and of course they're not. If anything, they're worse. Number 3, folks, we have KTOS, that is Kratos Defense. So Kratos is not your ordinary defense contractor. They're not building aircraft carriers. They're not building $100 million fighter jets. They're building the weapons of tomorrow. And the military just made it official. Let me explain. The future of warfare is autonomous. It's cheap, it's mass produced, it's designed to be expendable. Think about it. Why the hell would you spend 150 million F-35 into congested airspace when you could send 15 drones that cost $10 million each and don't have anybody in them? If you lose one, who cares? You got 14 more. Kratos is the leader in this. Their flagship product is the XQ-58 Valkyrie. It's a high subsonic jet drone designed as a loyal wingman for manned fighters. It can fly alongside an F-35, carry weapons, jam enemy radar, and absorb missiles that would otherwise hit the pilot. It's like having an expendable robotic bodyguard that can also shoot back. And here's the big news. You see the US Marine Corps just designate the Valkyrie as an official program of record. So for those of you who don't speak Pentagon, well, that is actually a big freaking deal. The program of record means recurring federal budget funding. It's not a one-off contract. It's not a pilot program. It's a line item in the defense budget that gets funded year after year after year. And it's very difficult to lose a Pentagon contract once you have it. Kratos expects to deliver 15 to 20 Valkyries in 2026. They've already won a $34.8 million contract from our Marines. There is a classified program called Poseidon worth up to $750 million that's ramping up in 2027 and 2028. Now, Kratos' defense rocket systems business is absolutely exploding. We're talking 116.6% organic revenue growth in Q3 alone. They've secured 60 Zeus hypersonic motors from L3 Harris, and they're scaling production for the Navy and Missile Agency. The Pentagon just signed a $900 billion plus NDAA. They have launched something called the Replicator Initiative, which aims to deploy over 1,000 autonomous systems to counter China. And guess who's the first to market with these drones? That is Kratos. They also just partnered with Airbus to develop a Valkyrie variant for the German Air Force by 2029. Europe is dramatically increasing their defense spending post-Ukraine. That is a whole new market opening up for them and other US allies. Now, the stock has already run up. It's about 190% in 2025. Market cap around $13 billion, but management is guiding for 15 to 20% organic growth in 2026 and another 18 to 23% in 2027. The multiples that you could see on this, well, if it gets more massive government contracts, which it might, and as this revenue rolls in, this could be substantial for the stock. Now, the risks, of course. Defense contracts can face delays, budgets get reshuffled. Sometimes the industry is notoriously unpredictable, but right now, with everything that's going on in the geopolitical world, it is hard to argue that this isn't going to be a major benefactor, folks. Now, I see long-term value here, but you have to understand the context. AI data centers are power hogs. We're talking facilities that consume as much electricity as small cities. They need that power 24/7, 365 days a year, not when the sun is shining, not when the wind is blowing all the time. Solar can't do that, wind can't do that, but you know what can do that, and that is nuclear. So stock number 2, we have NuScale Power, that is SMR. NuScale is a company that designs and markets small modular reactors. And NuScale is the only company in the US with an NRC approved small modular reactor design. The NRC is the Nuclear Regulatory Commission. It is one of the slowest moving regulatory commissions on planet Earth. The entire process of design to approval took over a decade. That is quite the competitive moat. So what's the small nuclear reactor? Think of it like a nuclear plant, but small and factory built instead of constructing a massive facility over 10 years. So you build these modules in a factory and ship them to the site. They're scalable. You can configure them in 4, 6, or 12 module setups ranging from 308 to 924 megawatts. This is perfect for data centers, folks. Amazon, Microsoft, Google, they all need carbon-free, reliable baseload power. They are literally becoming their own utilities because they can't get enough clean energy from the grid. And NuScale just landed some massive deals. Here are the catalysts. Deal number 1, we got RoPower in Romania, 6 reactors. Deal number 2, we got Entra 1 and TVA. This is the big one, folks. The Tennessee Valley Authority, that's TVA, the largest public power supplier in the US, just signed an agreement with Entra Energy to deploy up to 6 gigawatts of NuScale SMR capacity. That's enough to power 4.5 million homes, folks, or 60 data centers. This could be the largest SMR deployment in US history, and Entra 1 is also positioned to receive up to $25 billion in investment capital under the new US-Japan Framework Agreement. And that is not pocket change, folks. Now let's talk about the risks. Nuclear projects, you should know, have historically faced massive cost overruns and timeline delays. The industry has a checkered past. There's always the risk that these deals take longer to materialize than expected, or there's some sort of regulatory issue along the way. Personally, I think that with everything going on right now, the current administration and how they are running things and how important it is to build out nuclear energy capacity in order to stay competitive on AI, well, I think you should put this all together, and it makes the big picture much more convincing that this is going to be a big winner in the coming years. But, and these are the risks, it is still speculative, and it is far more speculative than the other players on this list. Nevertheless, it is one of my favorite plays for 2026. Okay, stock number one, we have VST, Vistra Corp. We have mentioned this one before on the channel, but Vistra is an integrated power company operating across 18 states. They own 41 gigawatts of generation capacity that includes nuclear, natural gas, solar, battery storage. They serve about 5 million retail customers, folks. Lots of proof of concept there. But here's what makes them special. You see, they've transformed from a boring legacy utility spinoff into what you can call an AI power plant. Now, I keep saying that data centers need 24/7 reliable power. Well, guess who has it? And that is Vistra. They own nuclear plants, they own natural gas plants, and they own the infrastructure. So Vistra just signed a 20-year power purchase agreement for 1,200 megawatts from their Comanche Peak nuclear plant in Texas, folks. 20 years, that's locked in revenue through 2045. Amazon, Microsoft, Google, they're all circling these power companies because they literally cannot build data centers fast enough without securing electricity first. AI and data centers are projected to consume 8% of US power by 2030, up from 3% today, and that supply has to come from somewhere, and Vistra is supplying it. So let's talk numbers. 2026 guidance is $6.8 to $7.6 billion in adjusted EBITDA. That's not revenue, that's EBITDA cash generation machine. The S&P just upgraded them to investment grade in December of 2025. That's a big deal. It lowers their cost of capital and signals that the rating agencies see them as financially stable, which is a great sign. And here's the kicker. 96% of their 2026 generation is already hedged in. That means that the revenue is basically locked in. Now, in terms of risk, of course, power prices do swing. Nuclear operations, again, have regulatory issues that could come up, but VST is a bet on something that's already working. And this is arguably the most built out play there in the space. And in regards to demand, I mean, data centers have demand. There is demand for data centers. The contracts are signed, the EBITDA is growing, the hedges are in place, and they've got nuclear and gas capacity that hyperscalers need, let alone want. So personally, I think they're going to continue their upward trend. If NuScale is building out the nuclear power, and we're bullish on that, if that is the case, Vistra is actually monetizing the nuclear present. So these are things to consider. So there you have it, folks. 5 stocks to buy heavy for January 2026. We went over the price targets, the bull cases, the bear cases, catalysts, and risks. I hope you got value from this video. And if you did get value from this video, all I ask is that you hit that beautiful like button and subscribe for more content. And as always, stay safe out there, traders, and I will see you in the next video.